Welcome to BW Business World. Good afternoon to everybody. It is not the usual afternoon for me, at least for me. We are here to celebrate National Startup Day, which was declared by our Honorable Prime Minister Narendra Modi on January 16, 2016. Today we are marking 7th year, and Startup India is a flagship initiative of Government of India to catalyze the culture of innovation, disruption, and entrepreneurship. Welcome to today's show, Indian Startups Growth Story, Past, Present, and Future. We will dive deeper to discuss what have been the major drivers of this growth. From just 400 registered startups in 2014, we are right now have 85,000 startups in 2022. India's startup growth has grown exponentially. In less than a decade, India is shining as the third largest ecosystem globally after China and the US. India right now has 108 unicorns with a total valuation of $345 billion, of which 22 unicorns with a valuation of $26.99 billion joined the club of unicorn last year, which means 2022. Government of India has been a great catalyst throughout the journey. Under PM Modi's leadership, the government has unveiled an action plan with 19 items spanning across three pillars, which is simplification and handholding, industry, academia, partnership, and incubation, and of course, funding, support, and incentives. We will discuss about what is more expected out of government, and we are here to discuss more about what lies ahead going forward, what is expected from the founders, and what are some of the pointers entrepreneurs are required to focus on right now, especially in these uncertain times when we are witnessing so much of uncertainty with the global geo uncertain dynamics. Can we start? I have very eminent panelists joining us. Please help me welcome Mr. Akshay Gulati from Shiprocket. We have Abhay Singhal from Immobi, and joining us, Akhil Gupta, No Broker. We will have another panelist joining us in a while, Prateek Gauri from Fire. A very warm welcome to all my panelists.
Thank you.
It's very difficult to start just because you all have your initials starting with A, and it's difficult for me to pick and choose. But if we can start with Mr. Gulati. To start off, I would want to focus on the past first. This particular day was declared on January 16, 2016, back then, 6 years ago. In your opinion, in your observation, what has changed since then? Also, in specifically in the last 2 to 3 years, during and after the pandemic, what, in your understanding, has been the growth driver for this startup ecosystem in India?
Absolutely. Thank you so much again, and pleasure to be here today. It's very funny, right? You said January 2016. I actually moved back to India in February 2016 for Shiprocket. At that time, we had a different name. It was Craftly. So it's almost the same as my startup story back here. But I think a lot has changed in the last 5 to 6 years that we talk about since National Startup Day got announced. And I think the biggest enabler for startups in the country that I've seen in the last 5, 6 years is the entire ecosystem that has gotten built. When I was here in 2016, whilst a lot of venture capitalists were there, they'd achieved certain scale, a lot of startups had become unicorns already, but the entire ecosystem was not as robust as it is today. And today it's not just robust in metro cities like Delhi, Mumbai, Bangalore, but even if you go to the smaller cities like Lucknow, Kanpur, Jaipur, there are a lot of startups that are coming out of there. And it's remarkable the fire that I see in entrepreneurs there and the ability to be, people are discussing meta marketing, Google AdWords, SEM. I'm from a marketing background, so I pick up more of the marketing stuff when people talk, less of the finance stuff, which my co-founders do. And, I think the entire ecosystem has really evolved to help entrepreneurs today at a much earlier stage. I think earlier what used to happen is that you needed to get to a Series A kind of level before people started taking you seriously. I think with all the incubators out there, with all the entrepreneurship programs, both public and private, today you're able to get access to resources a lot earlier. And I think today founders hopefully make a lot less mistakes than we did because of the help that's out there.
So for you, it was easier access to, let's say, incubators or mentors or capital for some instances. Mr. Gupta, if I can come to you and you can share, in your opinion, what were some of the major drivers for this growth?
Yeah, yeah. Thanks for having me. So I think, as Akshay was also mentioning, the ecosystem has matured a lot. So we started way back in 13, and we launched No Broker in 2014, and we strapped for almost 12, 14 months before we raised our Series A. So one is like, the angel network has become extremely strong. Like we as companies are growing, founders have started giving back to the society by inculcating more of the risk-taking capabilities of the youngsters, by letting them by helping them not just with money but also with the way they can be nurtured. So that was very, very nascent at that point of time in 2013, 14. Even the VC scene was very young in India. So like, people were looking up to West, what was happening in the West. They were just trying to replicate it in India. So that also was different. So like, No Broker is something which is built very, very specifically for India or maybe for Southeast Asia. So if there was no company which was doing a business like No Broker, it was tough for VCs to fund at that point of time. So that has definitely changed now. It has become more of a Bharat story where, as the ecosystem is growing, we people have started believing in Bharat story, that India is a big market. There's a big consumption market in India itself. Problems of India may not be same as what is there in the West, and there has to be local solutions which needs to be built for India. And there is a lot more support which has come up in last 7, 8 years, and which is very encouraging to see. As you were mentioning, like there are 100+ unicorns which are there, and even in this downturn where everybody else, if you go outside India, people are struggling in terms of the funding, although it has dried up in India also. But the sentiment when we speak to VCs and other of our sentiment has not come down, at least for early stage companies in India. So that has been a phenomenal growth in last 7, 8 years.
Thank you, Mr. Gupta, for this clarity. And of course, I sincerely agree with you that the whole ecosystem has matured, and the capability of risk taking has gone up. Welcome, Mr. Gauri. Thank you for joining us. We are just doing our opening round. We're looking forward to your opening remarks as well. We are right now focusing on what has happened in the last 6 years, and more importantly, in the last 2 to 3 years, because we are witnessing a very challenging time in the last 2 to 3 years. But entrepreneurs and disruptors such as you have been the enabler for the whole growth story of India. Before coming to you, let me come to Mr. Singhal. Your opening remarks. What do you think? How has this Indian startup growth has evolved in such a magnificent way?
Oh, it's an amazing. Thank you very much for having us. And as I think my fellow panelists were saying, our startup story has been for about 14 years, 15 years now. So we started back in 2006. So certainly have seen some interesting times, and I was an entrepreneur even before then. So 2001 to 2006 also, I had my very first startup that I had started out of college. So I believe I can probably capture the belief in a very interesting anecdote. It is, I was visiting one of my family members in Meerut very recently, and one of my relatives asked me to say, you know what, teach this kid how to start a startup. Back in 2001, when I was starting my own startup, I did not tell my parents for good 1 year that I hadn't joined this great multinational company and gone to start my startup. And I think that is probably, that encapsulates the change in belief, where parents now are asking their kids, what are you doing for the startup? Where, in marriage proposals, people are now writing that this guy has had a startup or is working in a startup or is an employee in a startup.
That's interesting.
I think that is where I see the India is changing. Now, of course, the ecosystem is matured and there are great success stories. But as we all know, India is a very, you know, all young kids are very, very parental driven to some sense. I mean, we want our society to acknowledge what we are doing. And I believe the societal acceptance of startup has probably reached its pinnacle, or has reached its right place in the last 6 years. Um, Telling somebody that you're part of a startup 16, 17 years ago, you must be a loser. Telling somebody that you're part of a startup now, you must be a winner. And that, I believe, is one of the biggest changes in the last decade, I must say, but certainly in the last six years. And I'll just present one interesting stat. I was reading somewhere in the morning. As of now, and we don't know what's going to happen to the valuation, so let's go with what the numbers are available right now. There are globally about 1,200 unicorns in the world. India has about 108, as you said. So roughly 10% of all global unicorns have come out of India. And I know that about 70% of these 108 have come out in the last 3 to 4 years. So certainly we have made our mark on a global scale, and we are now in the double digit in terms of the percentage contribution to the unicorn population in the world. So I think it's a moment of pride for everyone here.
And that's the reason we are here to celebrate this. Coming to you, Mr. Gauri, your opening remarks, how and what were some of the major drivers or moments of this growth story until now?
I completely echo with all the fellow panelists' comments. In fact, I think Abe spoke a very, very good point, and I think I can relate my life experience to it, because I also started my first business out of college when I was 16. And I was just given a choice by my parents, because one of my brothers is an IPS officer. So I was given a choice: either you have to become an IS, IPS, or a bureaucrat, or you go and get an IIT degree and become an engineer, or after a degree get into an IIM, or go get an MBA degree. Those are the three life choices given to me, and considering I did not want to go, or did not want to do either of the three, I was considered a loser. And they said anything with entrepreneurship wasn't considered a winner, just like Abhay was saying. And this wasn't limited to just my parents; it was limited to relatives. Was I think with friends or anybody. But I think fast forward 13 14 years now, when I started building Fire, I think the challenges initially when it comes to even convincing parents have been again huge, because they and now, but when you go out or when you tell people that you're running a startup, I think people want to talk to you more, and compared to, even if you're running a small startup, I'm not saying it's a unicorn, even if it's a smaller one, people want to talk to you more compared to somebody even working at a C-level position in a Fortune 500 company, or so that I think those kind of conversation have started to already happen. So you can see the success that the startup story or the Indian startup ecosystem has had. I think when you talk about nascency, or you talk about so I am in the Web3 ecosystems. I would still consider it again very new, very nascent. Web2 has obviously evolved a lot, but Web3 is still. So I think Web3 is still going through similar stages like Web2. So I mean, if you go back if you read New York Times in 1991, it said there is a new fad in the market called the internet. And then how many internet companies were created, and by the end of 2010, you saw Google pretty much dominate the space with so many companies. I think similar is happening with Web3 now, where a lot of amazing ideas are coming into play, and a lot of research. I think in startup ecosystem, I think when you talk about any ecosystem, the first stage is actually, I think, research and innovation, and then is actually technology businesses which go ahead and implement the research, and then is scalability. So I think those kind of stages I've seen in Web2, because I've built Web2 businesses before. But in Web3, we're still seeing the first stage, where there's a lot of research and innovation coming into play, and then entrepreneurs, I think, have joined in. And I think even if you talk about Web3 talent, I would like to quote a stat that about 12 to 13% of talent comes from India. So India is already making a mark when it comes to Web3 map, in a Web3 global map in the world. So So, and I also represent us, a sector sustainability. So that's again something with the future that aligns with what's going to happen in the years to come with the UN SDG agenda of 2030. Even with that, Indian entrepreneurs have kind of made a mark on the map. So any new sector or any new category that is created, I think Akhil spoke about how he built NeoBroker, which is again starting a new category. So if you see any new category where an Indian entrepreneur has gone ahead and built that category himself, and then kind of other entrepreneurs have followed it and built unicorns in the same category, I think Indians have been very good at it. So I think that's something which speaks highly of the research and innovation that happens in India by Indian entrepreneurs. So I think that's what I like to say.
Good to know. And you accord with co-panelists as well. So we have seen the whole shift in mindset, and as Abhi just said, societal acceptance has increased or even reached its pinnacle. We have another panelist joining us, Mr. Singh, Ravinder Pal Singh from Kalari Capital. Welcome, sir. Can I see you, please? So good to see you.
Hi.
You got a whole universe in the background, huh?
That's one of the ways to hide where I am. So
Lovely, lovely. We are right now discussing what has been the driver of such growth. You coming from the other side of the table can give us more insights. What do you think? In your opinion, what were some of the major transformational drivers which has pushed the whole startup ecosystem to come to this grand level of growth?
well, there's no other side of the table. It's the same table. There's no other side of the table. And I'm very, very new to venture capitalism. I'm a practicing engineer, and I pride myself as a practicing engineer. So first, there's no two sides of the table. Second thing, I firmly believe that that venture capitalism is as simple as a flywheel, where you find successful entrepreneurs and they basically push capital into the wheel, and then you scout for great founders and they become successful entrepreneurs, and then the wheel continues. I think we have seen initial symptoms of that, and this I'm saying as a teacher and as a professor of entrepreneurship. I think once this wheels really start moving, that everyone who is there in the panel, they are doing more as a compassionate capitalist to create more entrepreneurs. I think that's where the real maturity comes. I think we are seeing the initial seed of that. I only do deep tech investments as I'm an engineer, as I said that, so I only understand deep tech. And I think that next decade or next 24 years of India, which are currently being initiated from a policy perspective, I think government has done immensely good or provided enough seed clarity in terms of how the future of manufacturing or will be in India. I think those kind of remarkable companies will come out of India. I'm going to talk only about my companies just to clarify that. So China Plus strategy was with almost every leading analyst and almost every Fortune 50 CEO for 12 years. Now India is a good option, and there are companies which are actually creating. One of my companies actually has invented a reluctance motor, which is an alternate rare earth motor and can challenge China. So remarkable companies will come. Aerospace and defense, I hope, will seed large global companies and anything between them. So I think hardware, which was not touched by most entrepreneurs in India, or most investors, most investors will become the mainstay, and enormous amount of jobs will be created out of it, and enormous amount of prosperity will happen in next 24 years. That's the second point. Third point is, I think focus, since you started with the other side of the table, so the only other side of the table will be that the thesis-based investments will become more prominent. That means there would be an immense clarity in terms of which firm's thesis is for what kind of entrepreneurship. I think that clarity will come, and that would be the ultimate maturity. I see these things happening in next 12 to 14 years.
So good to know. So this was a discussion on what has happened in the past and has been happening. But now moving forward, what's going on right now? There is a funding crunch. We all know there is a kind of a conservative nature among investors for the better, just because they are eyeing very good, fundamentally strong business models and entrepreneurs who have passion and zeal to drive through. But the current global macroeconomic instability and the fear of anticipated recession is somewhat driving entrepreneurs crazy or unstable, if I can say. I want to know what, in your opinion, can be a good point agenda for entrepreneurs to follow to become a unicorn. Especially, I mean, all the four founders sitting on this panel are unicorns. What do you have to suggest? What strategy, what plan is working right now in terms of making an impact, building a good, fundamentally strong, profitable business, and of course, becoming a unicorn ultimately? Who would want to take it first?
I can go, it's fine.
Please, please.
So again, I think the first thing is, I don't think when you start a company, you go about trying to build a unicorn. I don't think this term unicorn was bandied around that much in 2016 when we started out, and yes, we want to build big businesses. We want to add value to our customers. And for us at that time, even if you said we built $100 million business, we would have been over the moon, because that's not really what we looked at. We really wanted to create impact. And I think in today's day and age, with this term being bandied around so much in the last 12 to 18 months, I think somehow the cart has come before the horse, where people are trying to build valuation-fueled businesses rather than businesses which actually make a difference. And I think all of us as entrepreneurs need to kind of take ownership about building products and challenging the status quo. I think that's where you truly create value. At the end of the day, I always, whenever I speak to young entrepreneurs, the one thing I tell them is, yes, you have to create value and you have to capture value. Don't just think about capturing value without creating value, because that's not a long-term sustainable business. And I think the building capital-fueled businesses just on the basis of raising new capital, I think that is something that entrepreneurs will need to learn is not a really sustainable business model going forward, and especially in our segment. So let's talk about e-commerce, because we're a logistics tech aggregation platform for e-commerce. And a lot of startups in this space have been built on new acquisitions. They haven't really focused on lifetime value of customer. They haven't focused on retention marketing. It's all been about pouring money into getting more and more customers, especially new customers. And that's the most expensive source of revenue generation. And in today's day and age, I think all of us as entrepreneurs will now need to focus on getting more value from those customers, getting more repeat purchases, focusing on, and that's much harder to do, because it's not about ad dollars that you can spend and build your top
That's
line.
right.
And that is something that's going to be very important, I think, in 2023, when we specifically talk about e-commerce. The second thing, I think, is going to be more about innovation and basically getting more share of wallet from your customers to a large extent. It's about, so if you were selling somebody one product and you were helping them in one part of the value chain, can you actually do more better things from them, which make the customer more sticky for you? And as Shiprocket, for example, that's a very important part of what we are looking to do. It's not just about, domestic shipping. Now we're into international shipping, we're into warehousing, and it's an evolution. In day zero, had we decided to do everything, we probably would have fallen flat on our face. But as you evolve, I think it's important to be able to get a more stronger relationship with your customer, build deeper roots and deeper handshakes with your customers. And that's going to be a very important part of what's happening. So I think the funding crunch, so to speak, I personally have not seen it as bad in India as when I speak to my counterparts in the US or in Europe. I think it's a lot worse. But I think it's more about the funding. Good companies, early stage companies are still getting funded. And if you're a late stage company, then you need to have a solid business model, because I think gone are the days where you can lose billions of dollars and double, triple your valuation every year. And I think that's a good change, because we're going to be forced to fix our business models much earlier on, rather than build it and then we will see as something that I've never understood. I still don't understand, because the bigger you get, the harder it is to pivot and fix your business model, because when you start out, you're a little motorboat, you're very agile, you can do what you want. Once you become big, you're like a cruise ship, right? It's harder to turn around a cruise ship than it is a motorboat. And I think it's always important to build right in the beginning than to hope to fix things later on.
So good to know. And it's very critical and very important to focus right now on making value, creating value rather than valuation. So we are right now encouraging entrepreneurs to focus on value over valuations. Mr. Singh, you are the right person to ask this question, I think. As you said, you teach entrepreneurship. Tell us what are some of these strategies, or let's say top three pointers, according to you, one entrepreneurs who are dealing right now in this ecosystem needs to focus on. Also, because we know that there are startups who are bootstrapped and are profitable. So, what strategy, what plan is working for entrepreneurs right now?
Look, as as Akshay, first of all, I learn from entrepreneurs and I literally worship them. They are my source of both academics and wisdom. Frankly, they are the ones who are building companies. They are taking the leap of faith. They are more than money. They are putting their peak of their youth or peak of their mature wisdom and time into that, and which is very, very precious because that can make and break somebody's future. So in that way, I literally, and I really mean that. Look, if you see beyond what is written in newspapers or in media per se, global prosperity is all-time high. Liquidity is all-time high. Okay. The question is that, look, will so-called this recession, will this be peak and true, or it will be a saucer shape? If it's saucer shape for a moment, there would be a lack of liquidity available depending upon which world you are. But even if we go by the most conservative estimate of if recession happens and if it touches India's growth rate is going to be still somewhere between 5% to 7%. 5% to 7% for the size of Indian economy is not a bad growth rate. Okay. But that's one way, that's a very, very economic way of thinking. But fundamental, if you choose to look even beyond that, purely from a common sense perspective, there are gaps in India. Those gaps are going to be filled up in India. My core of my thesis is some of the most complex global problems exist in India. And if India is able to solve that, by the nature of Indian entrepreneurship, they will be solved at a unit economics, which cannot be done anywhere outside of India. And if that happens, then these companies will become very, very large global companies. I think those problems still exist. In fact, they will become far more acute. Hence, far more smarter companies will come out, even if this recession happens, which everyone is talking about. Now, is there a money? Of course, early stage, there's money. Is there a stage for is there money available? For mature companies, C or D rounds? Of course it is there. It is being a little bit difficult because some of the questions which were supposed to be asked anyways are being asked now because there's a tremendous financial pressure of governance to basically do a provision of that money. Is it healthy? Of course it is healthy.
Yes.
Will it reduce the speed of entrepreneurship? I don't think so. I think speed of entrepreneurship will still increase because nobody is talking at a Series A or even at a seed level and discouraging any entrepreneur anywhere in the world, whether it is in India or whether it's Silicon Valley or Israel or European Union. So that's how I will answer that. What do I tell entrepreneurs to look? As I said, one of the issues with practicing engineer is that we actually want to understand problem in depth and then give our advice. So I'm not going to do that. I'm nobody to give advice. So for since I'm not in the board of any of the companies over here, so I'm not willing to give that. But most generic advice which people do ask, they basically ask in terms of how to utilize their capital before, and since it is before it actually crosses the valley of death, where the product incubation is happening and the market is not very, very clear. So most of the advice come from that perspective, and that depends upon whether you are making robots, whether you are making machines, whether you are creating a space rocket, or whether you are doing creating a platform of distributed computing on which Web3 stack will run. So that differs. I think those kind of problems or those kind of advices are still valid. Other than that, I think you have entrepreneurs over here. They are far more better and equipped to give an advice to another entrepreneur in a very generic way in terms of what to do and why to do.
Thank you, Mr. Singh. This was very informative, very insightful. Mr. Gauri, if you can light us upon how and what are some of the, I would not say challenging areas, but where do you see the potential lying to improve, to go beyond this benchmark? Do you see there is a scope for entrepreneurs to think beyond what is right now we are witnessing? Do you see a scope of improvement, or let's say growing exponentially beyond this level of growth? What are some of those areas from entrepreneurship level lens?
Yeah, I think I completely agree with I completely agree with what Akshay spoke or Ravinderji spoke on what actually is needed. I think we need to focus more on value creation and not valuation, like mere valuation, which has been happening. So I would like to also say that we've built we've been building Fire for about 1.5 years now, and we've never faced a funding crunch. I mean, specifically early stage, there was no crunch. So I don't think if you're building a solid business, which again, I think I would say there are 4 pieces that I would like to point, which I consider a solid business having. So I think first, I think very important is innovation. So until you have something innovative, I think India has been very, very good at it. And I think we need to be, say in Web3, we mostly call it white paper. Why do you actually exist? But in Web2, it's mostly innovation on what you're actually trying to do and what is exactly what you're trying to innovate. If it's a technology business, what additional element either you're adding to an existing business or you're coming up with something of your own if it's a new category. So that's, I think, one which is very, very important. I think now when we go for rounds, I think that's starting to take shape. It's very important to be innovative. I think second is how you're building your product, how bulletproof and solid your team is. Because in technology businesses specifically, and if you talk about Web3, there's a lot of attrition. So it's very hard to hire or get the best engineers or the best talent. So I think one big question that's always asked is how do you retain that talent, even if you get that talent? Considering everybody is ready to offer crazy salaries in Web3. I mean, if you are paying $1,500 salary to a Web2 engineer, it goes up to $5,000 to $10,000 in Web3. So how do you sustain that? And is money the only motivator? So that's, I think, so. And how do you then end up, if you've thought of something innovative, how you'd end up revolving your product around it with the help of all the engineers that you hire? So I think that's second. I think the third is definitely adoption in customers. So if you build the product, if you have something innovative, and I think that mostly happens after you've done your first round, and actually the conversations do revolve around, how do you plan to bring the best customer? How do you plan to bring stickiness, and how do you plan to bring customers so that they stick with you? So like, for instance, we are building a layer 1 blockchain. So how do we plan to build decentralized application to build on top of us? Considering there are so many other layer 1s. And I think that's what Akshay was also saying, that, how do you actually engage your customers and make sure they stick with you and don't jump to other platforms? So I think that's another thing that's being started to talk about. And it's not just a lot of marketing to get your customers, and then you lose those customers and you just get a valuation, but you don't get revenue. So I think that's again a question that's starting to get asked in the subsequent round, which I think is very, very healthy and important for us as entrepreneurs, and also for the whole ecosystem. So it's very healthy. And the last, I think, the revenue streams. I mean, how can you diversify them, considering we've seen a lot of businesses relying on just one stream, and then if something happens externally, it's an external factor, then you kind of face a lot of negative impact on your startup revenue. So I think that's the fourth piece which is also very important to diversify your revenue streams. For us as a layer 1 chain, of course, we are very diversified, but that's also very important. So I think focusing more on value than value creation, I think, is very important. But I don't think the funding has dried up, specifically in Web3 space. I think if you're early stage, it's been raining money for the last 2 years. In fact, 2021 was bull run. I saw most of the startups raise a lot of money, but I think now is the time to deliver after you raise the money. And I think I completely agree. There shouldn't be a second or a third round until you've proven your how you've used your first round money and how you've kind of built customers around you, how you've built your product apart from just being innovative, and how do you plan to diversify your revenue stream. So I think that's where the ecosystem is headed, which is very, very healthy.
Solid. Fair enough. Coming to Mr. Singhal, Mr. Gupta, and Mr. Gulati, the current state of the whole IPO game, or let's say valuation, the whole market right sizing has pushed startups in a very good way. How has it helped? And going forward, one prediction, a big change, or let's say transformation. What do you foresee going forward for Indian startup ecosystem? Mr. Gupta.
No, I think as I was mentioning that the ecosystem in India has matured a lot, and if you see the global environment and the way China has moved out of the scene, India is the only place, and the way we have the youth, our average age, the people who are coming in, as Abhay was mentioning, that everybody's like every young person, forget about entrepreneur, they want to prove something in their life. So that gives us a very good ingredient. So I feel that not only next decade, but next couple of decades belongs to India. And what has happened in China in last 12 years, the same thing will repeat in India. India not only will lead the startups, but the way manufacturing has started moving towards the India. I don't think there will be any dearth of money. It will be there as in when needed. Obviously, businesses need to have the solid business model. If a business doesn't make money, it's not worth a business. So it has to make money. It has to make profits. And a lot of IPOs will happen either in Indian market or outside India market. But I firmly believe that this next 10-20 years belongs to India, and a very good time, not only to start up, but also to innovate and deliver something new.
Thank you so much. Quickly, Mr. Singhal, what would you say? Of course, this right sizing has helped founders and entrepreneurs to focus on fundamentals and creating impact, keep innovating, and focus on sustainability. But what more?
Yes, so I was talking about the societal belief. I think, one of the things which the rest of the country laughs at the entrepreneurs right now is because they can't understand how entrepreneurs can run loss-making businesses. In fact, again, that common man laughs at us saying, "Yeah, ये बंदे ने यार मोबाइल फोन बेचने में 5,000 का लॉस ले लिया, मतलब मुझे समझ ही नहीं आ रहा कि ये बिजनेस बनेगा कैसे." So I think one of the things that I think as entrepreneurs, we will all learn. And if we don't learn, the industry will keep teaching us until we learn how to build sustainable business. Because there's nothing about unsustainable businesses. I mean, you can, the frenzy can last for 2 years, 3 years, 4 years, but ultimately I think the market fundamentals will take over someday or the other, and they are going to happen. Unlike the Silicon Valley, which I think has had its ups and downs and probably 40, 50 years of history behind it, India still does not have, it doesn't still have a great acquisition market. So the companies can't just build themselves and sell it to other companies because they think they can probably make a loss-making company and sell it to somebody and become part of a large ecosystem. So I think that stage of Indian entrepreneurship or market growth hasn't yet happened. It's going to happen in the next 10, 15, 20 years, but it is not there today. If it is not there today, then as an entrepreneur, you have no choice but to survive and build the business. And if you got to do that, then what choices you have. In reality, your choice is only to build a unit economics sustainable business. For how long can somebody keep investing behind a business that does not have the future returns that are out there. So I think, in my view, entrepreneurs will learn it. InMobi has created two businesses. One business that is quite profitable. Glance we created about 4, 5, 6 years ago. It is losing money, but it is on the path of becoming probably self-sustainable within this year itself. So my point is that it's not impossible. There are great examples of bootstrapped companies that have created very, very large global sustainable businesses. And rather than resisting, if entrepreneurs accept it and make that learning as a part of their repertoire, I think we will do a lot more collective good to the industry and move forward with a newfound wisdom.
Amazing, Mr. Singhal. Before finally closing this panel, Mr. Gulati, I would want your closing comments as well. According to you, how would the future of Indian startup ecosystem would look like?
I think the future is looking really, really bright. If I stay in my chair here, right here, I think the word startup is going to mean a lot more in India than just digital first businesses, which is what the last 10 years for us have been. And I think the other panelists have also echoed that. I think the innovations that are coming in agri-tech, the innovations that are coming in the fintech part also reaching the masses, manufacturing. The word, startup is used for tech founders, and the word businessman is used for people who are running manufacturing businesses. And I think that will change. I think the word startup founders will be across the board. I think the next 10 years is going to see innovation everywhere from manufacturing to agriculture, solving large scale problems. And that's going to be really, really exciting. I think it's a really promising future. And I think the support that we have from all stakeholders, especially the government, has really helped create this ecosystem, and it's only going to go from strength to strength.
You mentioned about being digital first. There was a report day before yesterday that stated Indians downloaded over 28 billion applications on their mobile phones in 2022, and that accounted for 5% of 625 billion downloads globally, next only to China. So this is the scale right now. Thank you so much. This is time for me to thank everybody who joined us for panel 1. We are yet to witness the grand glory of Indian startup ecosystem with amazing entrepreneurs such as you. Thank you so much. Thank you, Abhay, Akhil, Akshay, Prateek, and of course, Mr. Singh for joining us. Thank you so much.
Thank you. Have a wonderful rest of the day.
Thank you for having us. Thank you.
Thank you.
Now, moving forward, I am looking forward to this panel. Can I see you, Mr. Ankeria? A very warm welcome to all of you. I'm still waiting for Dr. Sharma to join in. I just pinged him. He will join in a while. So now, for our audience, this is a panel with funders, and earlier was the panel with founders. We will now discuss how and what has been the driver for this whole ecosystem to evolve to this stage, and to what extent, in what capacity, what capability investors such as you have contributed in this growth. Please help me welcome, we have Sudhir Rao from Celesta Capital. We have Mr. Vikram Gupta from Ivy Cap Ventures. We have Ankit Kedia from Capital A, and we'll be joined by one more panelist, Dr. Apoorv Ranjan Sharma from Venture Catalyst in 9 Unicorns. We will not wait further. We'll get going with this conversation. He can join in in a while. We were discussing about how entrepreneurs are focusing right now on fundamentals, and this whole downturn, if I can say, or difficult times in the current scenario have pushed entrepreneurs to focus on their fundamental unit economics and profitability. In my words, I call it path to profitability, because entrepreneurs were earlier in, let's say, 3 years ago or let's say 2 years ago, were quite keen on achieving the valuation over value. But now is the time. I know that investors are being critical. There is more rigor for the good, which is pushing entrepreneurs to do better and focus on the fundamentals. If I can come to Mr. Gupta, and we can start this discussion. In what sense, in your opinion, what have been some of the major driver growth of this startup growth, if I can say?
You know, if you look at the Indian economy, so today we're talking about close to $3.5 trillion economy, and if you're growing at 8.5%, obviously we're looking at a substantial growth over the next 20-25 years, and you're talking about anywhere between 20 to $25 trillion economy over that time frame. India is one country globally which is actually the size and the growth, which actually offers a substantial opportunity to the startups who are trying to really find innovative ways to really change lives of people. And you've seen already what has happened in the last 10 years. People have really gone with that kind of a mindset to make a difference, have actually gone on to become very large businesses. And I think that is only going to multiply further, because we've seen a substantial change in the mindsets of the entrepreneurs and also investors, and this growth we've seen across different segments, whether it's on the entrepreneur side or on the investor side. On the investor side, we've seen different categories of investors emerging, whether it is at the angel investment or seed stage level or at institutional investor stage level. We're also seeing evolution of regulations. Our regulators are also becoming more and more mature to encourage better policies. We're also seeing the government also encouraging a lot more policies towards giving more, hopefully, the direction is right, but from a taxation perspective, I'm hoping things will again continue to be better and better. So I think it's very exciting times to be in India, and I think to be an entrepreneur and to be an investor. So we as a venture capital fund, are quite excited about this quality of entrepreneurs that are, out there.
So good to know. Thank you, Mr. Gupta, for your opening remarks. Mr. Rao, if I can come to you. There were happy times until in March 2020 the pandemic came. The whole ecosystem leapfrogged from let's say basic survival to becoming the digital first or technology first, digital intensive ecosystem. Startups and entrepreneurs are focusing on innovating technology and across the sectors. That's not specific to any one sector. We then subsequently saw in 2021 an influx of funds which we can say we have created 44 unicorns in India with the and also today India is home to 108 unicorns, in which 22 have entered last year. This indeed seems very exciting time. What do you have to say? What were some of the major drivers of this growth during the last 2 to 3 years?
Well, thank you first, Resham, for having us on your panel. But pretty much, I think the name of this program itself speaks it, right? Business world disrupt. Yeah. So if you think about the status quo that we are in at the moment in India, wherever you just step out of your home, and you'll find things to do, things to make a change. And if you want to see the change, then you have to be the change, right? So I think
that's right.
What excites us to come back to work on a daily basis is that one lifetime is just not enough. And all of us putting our effort is just not enough. So the fact that, whether it's a governmental effort to sort of instigate, to catalyze movement, and in that context, whether, any scheme or any method that you bring into play, fund of funds, encourage the very fact that you should start up and differentiate, innovate, do things that are smarter than what we might look like at the go in, right? So I think that need to change the status quo is a big high for the 80,000 startups that are registered with DPIIT, and for 200 odd VCs that we're there in the ecosystem. If you look at us in the last 10 years, about 150 billion has come in and generated a value of about 350 billion. Now, when you use this in a more proxy way in 10 years, 3x, if you relate that to, let's say, $50 billion market cap on all public listed companies, you'll see a churn going into those $1 billion. There's a new way of doing the same business, and there are new businesses itself that need to come in order to deal with emerging requirements, right? So at our fund, we really look at core technologies that drive into feeding into emerging applications. On your previous panel, you talked about a Web3 architecture, which is a whole new way of looking at a trustless architecture, an architecture at the edge that empowers the edge. And if I look back, over the last 10 years, we didn't have Aadhaar, we didn't have the mobility that we have today. We didn't have a billion phones pinging around. We didn't have high-speed internet, broadband. We didn't have, so just 10 years, in a matter of 10 years, the access of this solid infrastructure that's come has come because of the need to change the way we look at stuff. Whether it's in rural India, whether I want to rethink, repropose, how do we include, billion of us? How do you include them? You can give them a phone, that's a first step. You can empower them with a bank account, that's a second step. But now that we are private innovators, beyond what the government's also doing, the private innovation system, in order to drive the change, that we can see that we need to make a change. I think we wake up as a set of people, very excited, energetic, need to change. Now, you talked about unit economics, you talked about winters, etc. Every year we have a winter. It's not like it is seasonal. You need to hold back. There is autumn, there is winter, and there is spring and summer. And that's very seasonal. It's not so hard for us to understand that. I'm sitting in something called the Biennale, which is once in 2 years. So you're talking about a seasonality of once in 2 years. I can go into decadal and I can say once in 10 years. So winter and this conversation of unit economics, etc., if you wear a quarterly lens, then you might say that lens is not the appropriate lens. The startup economy must take a minimum 10-year period, Your unit economics must pan out on a 10-year period. If you get your act right in that period that DPIIT talks about, a 10-year, 1 decade, you grow up in that 1 year. Now, how many rounds of funding do you require in order to build a theoretical unit economics for each transaction? It's hard for a country like ours. In our country, we have multiple cultures, multiple geographies, multiple languages. It's not so simple. When a startup kicks off, probably we don't bake in all that it takes, that actually takes to build scale. And sometimes, therefore, you burn more fuel than you get any distance covered, right? So if you're in first gear and you're high revolutions per second on the engine, and you're not moving any distance, that's a huge energy cost. And we need to bear that cost because we're trying to make a change, right? So unless we understand that, $150 billion investment in a $3 trillion economy is setting in motion in a 10-year period, a very small period. Think about that. If we're to grow at the 8% that we talked about, you're adding $250 billion of economy, right? Per year. And if I take the words of the chief economic advisor saying that in 7 years, we're going to be 7 trillion, that is another $3 trillion of new factors of productivity, factors of production. And to that factor is what we're all excited about, whether we're providing capital or we're providing effort between founders and funders, as you call that. It's not very different. It's all effort at the end of the day. So I think it's exciting times, but we have to rethink the fact that these will take 1 decade more and 1 decade at a time.
Very, very beautifully explained. This was very informative. Mr. Kedia, coming to you. Your opening remarks of how are you seeing the whole ecosystem right now, and what has changed and transformed in the last 2 to 3 years?
Uh, I think perhaps I'm the black sheep here. I don't do VC. I haven't done VC. I haven't been in the VC industry for the longest years that some of my other co-panelists have been. I've been an operator until 2018, had my family business and then sold that family business to a private equity fund. Obviously, the entire life cycle of a private equity fund coming in, with 2 rounds of capital infusions and then acquiring a couple of companies, the M&A transactions, I've gone through that. But I've been investing since 2017. So the angel investing side of things I knew, but turning full-time VC from early 2021, where I've seen half of the year in a complete bull market where everyone or all founders were securing funding in record time with record turnaround time, and then the rest of the year was a bit slow. And then 2022 we saw the entire we saw the entire cycle of growth stage companies settling for flat rounds, down rounds, or bridge rounds. And now I think that entire correction will reflect in the year 2023. I think the entire focus on how businesses should be done, businesses fundamentals haven't changed ever. It was just the fact that a lot of money that went into investing in a lot of companies without a proper business plan has finally led to what we call as funding winter, or we call them, whatever term we use for it. But I think this 2023 will be quite an exciting year, both for investors as well as for founders. It will also lead to founders rethinking their business strategy in terms of how they want to really, think about their businesses. How do they want to go about it in terms of the hiring, in terms of their expenses, in terms of their business plan, marketing plan, and so on and so forth. So 2023 will be quite an exciting year. That's our belief. A lot of momentum sectors are going to pick up, and obviously we'll go after them as investors.
Thank you, Mr. Kedia, and I sincerely agree with you. We are yet to witness more exciting times. Let me welcome Dr. Apoorv Ranjan Sharma from Venture Catalyst. Thank you, Dr. Sharma, for joining us.
Thank you very much.
We're looking forward to your opening remarks as well. Everybody on the panel has said so that these are exciting times. Let us know what has been the exciting things for you from your lens.
So we basically in early stage, idea in early stage. When there are challenging times, obviously the startups in the growth stage, they are very much impacted. But at the same time, the opportunities for in the idea stage and the early stage definitely grow, right? So for us as a Venture Catalyst 9 Unicorn, we are getting good opportunities at the right time. See, over time, if you see, last 7 years has been very, very exciting years for Indian startup ecosystem. We have grown from 10,000 startups. I remember we used to run a NASSCOM 10,000 program earlier. From there to in 2013-14 to now, we've become a 150,000 startup economy now. So 10-15 times the ecosystem has grown, and so the number of unicorns. The face of India is changing. That is very important. Globally, for about 3 decades, we were known for, an IT service nation, right? Probably we used to produce one of the best engineers, right? And those who used to become the CEOs of large multinational organizations. That's what was the face of India, right? But what is the new development? Out of 948 unicorns in the world, 110 in India and 90 plus in US, done by Indian diaspora, close to 200 plus. And that is close to 20% market share in the number of unicorns in the world. So you are already producing some of the best entrepreneurs of the world, right? And that is the change of phase which is happening. And this is going to grow, gentlemen. You know, we at the idea stage, and we are seeing it very, very closely happening in India, because India is producing some of the sectors which don't exist in other parts of the world. India is producing some of the, you know, concepts or innovations which, you know, are not applicable for smaller size economies. These are India specific. So we are very excited because sectors like agriculture, sectors like, you know, the, I'll say the, where especially the handicrafts, right? I'm talking about many ESG related sectors. Those sectors are real India problems. And these are very large India problems which we are solving now. For example, EV. I mean, our investments in EV and that space are giving us very, very good returns, right? Largely because these are the problems which were India large problems, and they are getting solved by these startups. So I am 100% sure today, when around 16% of GDP contribution is coming from the startups, it is going to grow to 30-40% in the next 7 years' time. And that is a time when you will see some of the best companies in India driving the economy of India. And we are looking forward for that time.
So good to know. You talked about angel investment. On those lines, I wish to come to you again. We are witnessing not only entrepreneurs coming from tier 2, tier 3 cities, but investors as well. People who are sitting right now in small towns, tier 3, tier 4, are willing to invest in innovative startups that are disrupting the space and market. What do you have to say on this point? When we are in the need of domestic capital, we are encouraging domestic capital.
I'll tell you something. The change, and this is probably one of the biggest tectonic shifts going to happen in the future. India has lots of capital. You have around 10 million demat accounts, out of which 3 million are the demat account holders. They are already investing in startup. 8% people used to invest in crypto in India, right? So this asset class is not riskier than that, right? And it was only the unlocking of that which was required. We at Venture Catalyst has reached out to around 50 cities in India, educated a lot of people to co-invest. But and I'm telling you, not this Surat, Raipur, Nagpur, a lot of tier 2 cities, Kanpur, they have already, Jaipur, Udaipur, they already started, a large number of angel investors started investing from there. We are about 3,000 plus angels who are paid members with us now, and about 10,000 signups with us. So these people, around 30-40% angels are coming from these smaller towns, those who want to invest and start developing the companies. So that is a new breed. And I want to tell you that this percentage is going to grow to at least 70%, because the real capital is in, if you go to Rajkot, that's there. Even the Silicon Valley, if you see, ma'am, the changes have started happening. Everybody used to raise capital, they used to go to Silicon Valley, right? Now, where is the real money? Texas, right? Where the family office, even as a fund managers, we have to go there now, because end of the day, that new money automatically go out, right? There are weathers for that, but for the solid money, there is no weather, right? So people have realized, and now in India, then you will see. I mean, we have Vikram here, and he has raised a lot of capital from India, and we have a lot of VC funds from India. I mean, Nikhil and all, they have raised money on, and about 80% capital in 9 Unicorn has come from Indian LPs, right? Out of 900 crores, around 700 crore come from Indian LPs. And almost every year, I mean, when Venture Catalyst, last year we invested 400 crore, right? It is all domestic capitals. So we have people who are already very successful in business, and they have started spotting this space. And right now it is only 5% intervention. I'm waiting for 25% intervention.
How lovely. This can sound crazy, but the trajectory, the pace is such that we can expect this thing. Mr. Gupta, what do you have to say? Would you agree to this number, crazy number?
No, absolutely. I totally agree with whatever Purva mentioned. I think, of course, lots of people ask me this question. I mean, we today manage about 4,500 crores, and this is all domestic capital, right? So I think, people ask us, how did you, raise this capital in India when most of the VCs actually start raising their funds outside of India? And I can tell you that, this transition has happened substantially over the last 10 years, where not only the institutions, which are the largest banks, insurance companies, the government of India, which is actually creating multiple pockets of fund of funds. What Apurva mentioned about this tier 2, tier 3 towns, where lots of these people are now really, are able to understand the meaning of this asset class. Historically, we've seen people actually not willing to put in their capital for long term. They thought this was risky. Now everywhere people are talking about startups, right? So, and National Startup Day is being celebrated now even in tier 2 towns. I'm actually sitting here in Goa in BITS Pilani campus, and it's a big deal here. This Startup Day is actually, there's lots of startups here in the campus right now, and lots of investors sitting here. So that's happening across different cities in India, where smaller towns are actually talking about how to invest in these startups, and that's actually creating a lot more domestic capital. And I think for VCs like us, we don't need to go out of India. Even if we just continue to raise capital, even for the future funds, and even raise $1 billion going forward, I think you can raise that capital in India today. I mean, one could have never thought about that maybe 10 years back. So it's quite exciting.
This is so amazing. This is so amazing to know. And with this, with this in the background, India is at such a position competing with China and US. Mr. Rao, there is a trend right now, or let's say there is a momentum going on right now where investors are keen to disperse the capital in smaller ticket sizes. And in this way, the investments in early stage startups has gone up, and there is more rigor when it comes to investing in the growth stage startups, and which is for the better, which is critical, which is important. I absolutely agree. In the last quarter, there were only 2 startups that turned unicorn, and unlike the earlier year, we have seen many others joining the club. So on the valuation part, we have already discussed that it's important for businesses to hold fundamentals and unit economics more seriously and stronger. But the third quarter of 2022 witnessed $3 billion in funding, which is 57% lower than quarter 2 2022 and 80% lower than the peak funding of USD $14.9 billion received in the same quarter last year. So the number is showing a substantial decline in terms of the big ticket size investments. What do you have to say about it? And also going forward, if we can predict how long will it go? I agree. In the last week, there were more than 6 deals, which is growth stage. So according to you, what is this trend? How can this impact the startups' growth? And going forward, how do you see this space evolving and the investors' sentiment all across?
So, I have an old thesis that anything you do in an urgent manner is very expensive. If you do it in an important bucket, non-urgent, often you're okay, right? So I guess what we saw over the last few years is that there's these cycles of greed across the board, right? So humanity goes through massive waves of greed, and it's a very societal thing to be greedy. It's not just the individuals who are greedy. There's a momentum that takes place. And often in these momentum periods, when there is excess greed, there is bloodshed at the end of it, right? So in a sense that it ends up as a crash, you fall off the cliff, things fall 50%, Just as when it went up 50%, nobody asked questions. You see, when you're satisfying greed, it's okay, because there you're getting a high over it. But when it falls, it also falls almost similarly. There's not much gap between the way you talk about a V, we talk about an A. Yeah. So if you go through any charts, graphs, you'll see this. So one of the things that we've got to do is step back a little bit from the event that has already happened or is likely to happen. But when you step back and watch, you'll see there's a certain tsunami-like move, which is soft. It doesn't look heavy, but actually it's a big churn going in from the inside. Our sense when we're investing, given the fact that we're structured as, decadal plays, we have to think 10 years at a time. We can't think less than that. That's number one. The urgency, therefore, for us becomes, it's important only if it's important, but not urgent. Will we actually move? So in a sense that if you say that the big checks have fallen off, the big checks came, and at the time they were coming, we were not asking the question, why are they coming? Very similarly, you don't need to ask the same question to say, why are they going? Right? So if you didn't ask them why they were coming, you don't have to ask them where they're going. So if you cut that off, now look at the momentum. Now look at the tsunami underneath. And those were the stats that you pulled up a little while ago. Now, what's actually going on is pretty substantive. Because when I step back and watch the move, it's pretty substantively in a growth trajectory, right? So I think the key to take away is this enough money that we're talking about? Is $150 billion enough? Or is it $500 billion? I remember 30 years ago when I was involved with setting up the mutual fund industry in India, I was a participant. At the time, we would have, it was baloney to think that we would have fund managers managing funds. You had banks and bank deposits, and that was the only asset class almost available to every Indian. And to, amplify what Dr. Apur said and what Vikram just talked about, is that it's not about tier 1 or tier 4. Anybody who's got wealth is going to allocate to an asset class that is performing in nature. As long as this industry or this segment, the startup economy as we call it, or the VC funded economy, exercises the appropriate governance, the appropriate guardrails, and yet disrupt. It's very hard to do both. When you're thinking about creativity and disruption, it's hard to say have some guardrails. It's very difficult. I thought you're trying to break the guardrail, and that's why you want creative destruction, right? But creative destruction is not so simple. You can only look at it with a lens which is a little longer term, and then it's helpful. If I looked at 30 years ago, managed asset class in public markets, at the time everybody was in direct equities. Today, it's almost as much as banking deposits. It's 1.6 trillion versus 1.8 trillion. It's very close. In this 30 years, in 3 decades. Come back to the alternate asset class, which is, we're talking about private markets, and within private markets, we're talking about the startup economy. The total money that's actually getting allocated is very minuscule towards innovation, towards this whole effort. So to think about 150 billion is not, it's not over 10 years. We're talking about over 10 years is 150 billion. We should be looking at what will be the velocity annually, because there is a massive savings pool in India. There's no problem with the savings pool. It's directing that savings pool, and therefore, to your point, I don't think that I'm worried about a winter. I'm more worried about, will we be accountable for these resources that are being given to us by investors? And I'm saying, for me also, there's an investor behind me. And then we are all part of that value chain that is attempting to drive important customer value for whether it's in India or globally. And I don't think that overall aspect we're going to ever lose sight of. I mean, it's great to know that Vikram's been able to raise 4,500 crores, which if I do it in $1 million, I don't see why they at Ivy will not manage $1 billion sooner than later, because they'll be trustworthy. Of course, we make mistakes. Of course, we are not good enough all the time, but that doesn't sort of desist us from having the belief that what India needs is governance in private capital utilization, and hopefully we'll all build that which is required. We may go wrong, that's you have to accept when there's a party, and if you've taken to drinking, you might have a 1 drink extra, which is not good for you. Get off the bus. That's okay. That's one night. You don't have to do it every night, right? So have faith that these are all course correction more than everything else.
Very well described, and I loved the way you posed this, because it is important to hold people accountable for what they are. What should I say? They're working, or they're moving ahead. They're going ahead, and the most critical for entrepreneurs should be the customer. And of course, the value creation, impact making, and large scale solution making. That should be the innovation driven. Coming to Mr. Kedia, there is also, let's say, a certain focus, as just Dr. Sharma said, ESG, or let's say climate, EV. So there is certain focus on certain areas. We have now high hopes from drones. We have high hopes from deep tech. These are certain areas. Do you see there is a momentum-based influence among investors? If there are certain startups which are doing well in certain specific sector, is this the right way to go about it? Do you think investors are being, let's say, flown, or let's say going towards a trend in order to invest in certain sector?
I mean, every investor will have some theme or some focus around their investment styles. I mean, obviously their outer metrics are still fixed that, they will invest 2 to 3 million. They want certain ownership in the company. But then what happens is, if they are a completely sector agnostic fund, what we've seen is that it becomes very difficult to choose the, how do I say, the diamonds amongst the stones, right? And that's why at Capital A also we sort of decided very early on, in order to avoid a very overwhelming situation, we picked up a couple of sectors, climate and fintech to be specific, and any other tech-enabled businesses. I think what happens with momentum is, if you are investing in momentum, you get company on the cap table, you have other co-conspirators or co-investors who come along with you to join the party of a very high momentum sector. Second thing, I think network effects becomes very powerful over there, right? Because investing in a momentum sector will also allow VCs to build a great network of companies, entrepreneurs, and other investors that can provide insights. I mean, things that I don't know, maybe some other investors can provide. And obviously opens up a lot of doors in the future, has enormous access to, deal flow when you have one investor focusing on a certain sector, and then that also opens up avenues for other investors to join the ride. For us, ESG is a very, very important area of focus. Over the last 2 years, across 20 investments, 5 of our investments have been only in EV alone or its adjacencies, including ecosystem plays like motor, powertrains, deep tech technologies, predictive technologies, because usually with EV, people only relate EV with a two-wheeler or a four-wheeler. But the ecosystem around it will remain constant or will remain relevant for a longer time. That's one area that we are focusing on. We've also extended that thesis now beyond EV to go into more sustainable forms of energy, waste management, power efficiencies, industry 4.0, smart manufacturing, a bunch of other things. Momentum, every year, every 2 years, there is a cycle, right? Some years, fintech becomes like the pet peeve of every investor, or could be e-commerce platforms at times. But I think it's just good to be a part of the party, as long as you know who are the folks joining the party and what's going to be the outcome of that party.
My apologies, I was on mute. So good to know. And you're correct. You're absolutely right. in order to achieve certain goals, certain larger goals as a country, as a nation, it requires certain attention from contributors such as you. Mr. Gupta, if I can come to you, we are like sitting on January 16, 14 more days to go for budget. What are the expectations? What exactly are we looking forward from Government of India when it comes to budget? We can talk about ESOPs, we can talk about LTCG, just because investors community per se is seeking some parity there. What do you have to say about it?
No, I think, of course, the wish list is pretty large, but I think, and obviously, it requires a lot more push towards making the change happen in this sector. And I think it starts with the multiple pockets of changes which are required. For example, on one side, the taxation is a big issue in terms of how do you treat the taxation with respect to investing in a venture capital fund or investing through a venture capital fund. Of course, one of the biggest requests from the industry has been the parity between the alternative asset class and the listed space. So that's been one of the most critical asks, and we hope that at least some positive things will happen in that direction. The other hope is around some policy changes, with respect to all the regulators who are defining and directing this space. We know that there's SEBI involved, there is IRD involved, there is RBI involved, and many of these policies which are there right now, with the small changes here and there, substantial large amount of domestic capital that can flow into this space. And I think, of course, historically, there was hesitation from the Indian institutions to be investing in this sector. And I think now investors have seen positive outcomes and they have tested this. So obviously, that should serve as a proof that this sector not only creates an impact, there is also very good returns in this sector. So I think from that perspective, there are important policy changes from an RBI perspective, from IRDA perspective, specifically with respect to allocation of insurers or even banks into this asset class. And of course, there are quite a few other opportunities that are there, but I think we hope that the right steps are taken in this direction in this budget itself.
So from Mr. Gupta, they ask continue to be the same, the parity between alternate asset class and the listed space. Mr. Rao, would you like to add to this?
I reckon that the government participation in the startup economy, at the end of the day, it's the Government of India budget that we're talking about. And it's about how they manage the resources. I think the fastest growing industry in our country is tax collections at the moment. And that means we're far more tax compliant as a nation. And therefore, the resources available both at center and state is substantially higher than I've ever seen it 20 years ago, let's say. The demands are high, no doubt. But now you're talking about allocating these resources that the taxpayers put into their ability to actually allocate. And the allocation, therefore, to this economy, this segment of the economy that we're saying is the innovative engine of the economy. The budgets for research and innovation must be very clearly articulated. And if that is possible through a sort of an interministerial view, then we as investors and as startups can get to understand what direction we can take, whether it's agriculture, whether it's housing, whether it is very similarly in each segment that our $3 trillion economy is made up of. How can we look at this in a very holistic way and then think about this in a 10-year time frame? Because this budget is, of course, this annual budget, but what you lay out as policy and therefore the incentive structure, to Vikram's point, whether it's a taxation on the potential capital gain that one may make in creating these enterprises. But these enterprises, the investment profit is one element of it. What we actually leave behind for the economy is an engine that is much more well-governed, a much more racy, energetic, and it's got to touch every element of our GDP, right? So how will the railways change through the startup economy? How would you expect police stations to work with the startup economy? You think about every segment of governmental expenditure or governmental allocation, or you look at the entire GDP, and I would love to see a policy that allows us in the industry, we're nascent, right? We're saying that we're very young. It's a very young industry. It's less than 20 years old. It's catching momentum over the last decade. And I think it's going to be a very important part of the agenda. And I really do like the fact that, for example, for the first time, Startup 20 was added as part of the G20 program. The initiatives that the government is taking are very central, very clearly being enunciated, and there is a trickle down, but anything more from a policy initiative that moves towards that direction and stitches all of us, whether we're VCs or the startups. And I think those elements are going to become very critical, and allocating capital for doing that, whether it's the fund of funds scheme that's been working exceedingly well, whether it's the NIIF, at every stage, we need equity support to take this new risk, which is the risk to sort of alter the method that we're using in building our country. I think that's really pretty much what one would seek. If you look at GEM, a brilliant piece of architecture for startups. I mean, we get preferred treatment. It's brilliant. I mean, Ankit, you talked about, drones. We invested over 5 years ago in IdeaForge. And I would say, if it were not for the policy effort that both the company, in fact, Ankit Mehta, who was the founder, was involved in a lot of the drone policy shift. And I think we had a very solid government listening to what we need to do from a regulatory standpoint, from a preferred participation standpoint. And today we're very glad to say that it is clearly a leader in its class globally, because the quality of product that we have built in India, and we're very proud to say it's from IIT Mumbai. We're very proud to say it was built in India. It's indigenous technology, adopted by the defense in India. But more importantly, when the drone regulation opened up for civil space, IdeaForge's drones have now covered over 17 million land parcels of villages which have been digitized and handed over to the government to actually relook at land owning. So you can use the startup economy very differently. And I think it goes from policy that is set annually, of course, at the budget, but more importantly, take a look at it from a 5-year, 10-year view.
So good to know. So insightful and so informative. Thank you for drawing this picture of what lies ahead in Indian startup ecosystem from the investors community as well as for entrepreneurs. Before I come to everybody, on one point, a single piece of advice to entrepreneurs of this time to strive through, to thrive in these uncertain times. I will come to Mr. Kedia. Would you like to add to this budget expectation?
I think the budget expectation will be very, very startup policy oriented, because we've seen so much happening on the regulatory side, both, say, for example, on the fintech side with the regulatory authority coming down on PPI, and then on the, say, for example, the battery swapping policy, where the interoperability also is getting promoted very heavily by the government. So each passing year, you see that the finance minister is presenting more and more startup-oriented conversations. I will not say all the policies are the most favorable, right? Like Vikram mentioned earlier, in fact, SEBI is also contemplating the entire LP contribution of 5 crores per LP, which will then restrict a lot of potential LPs coming and joining the entire VC asset class. So those are things which we see. I think it's going to be a mixed bag for sure, but then a lot of things that has already happened during the year, pointing towards the drones and EVs and ESG and whatnot. I think those are going to be extremely interesting to see what the government is finally going to come out with.
Thank you so much. Thank you so much. One final last question before we finally call it a close. Mr. Gupta, your one piece of advice to entrepreneurs, how they can thrive, how they can shine in so-called uncertain times, current times.
No, I mean, if true entrepreneurs know always that there will be ups and downs, and I think they always plan for the long haul. And as long as you're focused on solving the right problems, bad times will come and go. I think if you stay focused, stay disciplined in your approach, keep focus on the core business and, be capital efficient as much as you can. I think fundraising should not be a benchmark for your success. I think the success is how you're able to make a difference to the lives of the people that you're really out there to do. So I think that's the basic.
Thank you, Mr. Gupta. Mr. Rao, what would you say? Which to do for entrepreneurs can make them shine?
I think just do the do. There's one of the important points is just keep doing the do. Once your purpose is very clear, you set your purpose, have a deep purpose, keep your customers and your colleagues ahead of everything else. And then, fundamental to the whole play is stay at it, stay calm, or just stay at it. Because these are long hauls. No enterprise just gets built, only by luck. It takes a lot of hard work too. And you can't sacrifice your hard work. You can't assume that is going to get dispensed with some great luck, great fortune, some momentum. There will always be winds that are tailwinds sometimes and headwinds sometimes. But you've got to have your course very clear, and then you stay with it, and it'll work.
Amazing. Mr. Kedia, what do you have to say?
I think I come from a very conventional conservative background. So my advice to the entrepreneurs would be, please build a very solid business plan, have models around sales, revenue. And while I understand it's not easy to, or it's not possible to get a profit from day one, but at least figure out levers and figure out ways to get there. The investment landscape is going to be more brutal than what it has been so far. Gone are the days where mindless deployment of capital was the norm. We will have investors asking tough questions. You have to be ready with tough answers, and you have to get your hands dirty.
Thank you so much. And this brings us to the close of this amazing show today. In the earlier panel, we had founders who are leading the businesses, great, strong businesses. And on this panel, we have amazing investors speaking. So on earlier panel, they talked about societal acceptance of how being an entrepreneur, running the business out of their innovation and disruption is now at the pinnacle in India. Change in mindset, change in belief. We are going beyond tier 3, tier 4 now. Also, there is a lot more focus on building sustainable businesses, profitable, very critical focus on profitability and revenue generation when it comes to business. And you, of course, talked about governance and guardrails with innovation and disruption. Also, if government can come along and weave all of these stakeholders together in one ecosystem, this is the time we are looking forward to. And there are there is a long list of expectations from the budget. We are looking forward to that too. My sincere gratitude to Mr. Gupta, Mr. Kedia, and Mr. Rao for joining in. Mr. Sharma just dropped off. Thank you so much. It has been a very lovely, lively, and very insightful conversation with you all. Thank you for the founders who joined earlier, and thank you for the funders. Keep investing, keep innovating. Thank you so much.
Bye.
Thank you.
Thank you.
Thank you.